morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, did I suck yesterday or what? I mean, come on. How about that trade, guys? Did that suck? I'll tell you what happened. I came out in front of this video camera to do a video for you to tell you that we were hoping for a little pullback, and we tried to sell that pullback yesterday. By the time this video went out on the airwaves, we were already stopped out of the trade. I mean, I was that bad. But you know what? My dukes are up. My dukes are always up, baby. And I am coming out tonight, and I'm going to knock this market out because I do not stand for taking losses. And I am here to say that technical analysis will easily fix this for us. And I have some great charts I want to show you for this evening, traders. In fact, the NASDAQ has clearly emerged as the leader. We told you that in last night's video. I am going to show you some charts now that will clearly illustrate that. So without any further ado, let's go right to the charts. Okay, traders, this is the chart of the British Pound Daily Bar. This chart leaves you off on Monday evening. This video is being filmed on Monday evening for Tuesday's trading. So this is what the daily bar chart of the British Pound looks like as of Monday evening. And traders, look at the beautiful breakout. We're all the way up to here right now. British Pound, after a long consolidation period, has broken out, and it looks pretty strong here. So you have to be a buyer of pullbacks or a buyer of dips in British Pound, including the different indicators. Everything about the pound right now tells us we need to be buyers of dips. And again, this is a beautiful breakout over the major resistance, out of a little apex, and on the way up it wants to go. Now that's the British Pound. I'm going to show you a few currencies this evening because the whole thing will make one picture for you. So British Pound done. Let's go to the next. Okay, traders, now it's Euro currency, September daily bar chart, and long consolidation period, sideways consolidation, a little up, a little down, but it never went anywhere. Well, we broke through that on Monday, and it looks like it wants to continue further. Again, indicators in the Euro currency, like the British Pound, are pointing north. The formation looks good. It's a nice breakout. You could even possibly consider this some form of a flag, and away we go towards the upside. So now you have British Pound and Euro currency. Many other currencies will show you the same look. Whether I show them to you in tonight's video or not, pull your own currencies, because you're going to see very many currencies just beginning to explode against the US dollar. Let's look at more. Okay, traders, now we are looking at the Canadian dollar. It's the September daily bar on the Canadian. You had a double top right here, blew through that double top on Monday. Canadian looking good, indicators looking good. Another of the world's currencies that are beginning to run up against the US dollar. And if we stay above that double top, that's a pretty good sign. We're going to go much higher. So keep your eye on the Canadian dollar. Let's look at another currency. Okay, traders, once again, you had a nice long consolidation period, and now we are looking at the Australian dollar September daily bar. And this too looks pretty strong here. Look at that. That wants to go straight up. It's continuing to move higher after a nice long consolidation period. Again, against the US dollar, you have a lot of currencies in this world starting to rally, pushing down the US dollar. And why does that make a picture for us? Traders, the Fed wants cheaper dollars because cheaper dollars will push our stock market higher. If world currencies go up, US dollars go down, and the US stock market continues to move higher. The Fed, I kid you not, the Fed wants cheaper dollars, and they're getting what they're looking for. Let's continue looking. Okay, you are now looking at the US dollar index. Another nice long consolidation period, and you had a double bottom. You bounced a little off that double bottom, but finally we took it out. Boom, boom, all the way down to here, traders. This dollar does not look good here. You can easily see dollars hitting the 7,200, possibly as low as 6,800 coming soon. The Fed wants the dollar cheaper. Traders of the world are having fun selling the dollar and buying other currencies, and it helps our stock market. So let's continue trading the dollar from this posture. That would be selling rallies, as we are of the buying dips posture in the British Pound, Euro currency. Keep your eye on the currencies, traders, because I'll tell you right now what you're looking at is a dollar eroding, and that dollar will move further lower. Even if there are some intermittent rallies, expect the downside to come your way. Okay, traders, now we're moving over to U.S. indices, and this is a chart I put before you last night in last night's video. I mentioned NASDAQ has clearly emerged to be the leader, and I said the NASDAQ was falling down out of a trend line, out of a parallel channel, and I thought it would start to move down a little. Forget it, it did not happen. This chart I did show you last night, and I said clearly I wouldn't sell that, but we're following the leader, which is NASDAQ. Well, as it turned out, that was absolutely right. As always, the analysis is right. You couldn't sell that because it went straight up and really took off. Traders, after this flag that we showed you last week, look at this thing starting to go. It is really starting to take off here. Flags work really well. Technical analysis works really well. And it appears now that these markets are ready to explode. I'm going to show you a few more indices, then I'm going to show you some weekly charts, and then we'll end up with one last chart of the S&P, and I think you'll get the picture. But remember this, as dollars move lower, this chart moves higher. Let's look at the next chart. Okay, traders, you're looking at September NASDAQ daily bar chart, and again, because we settled lower than this line yesterday and so many indicators were pointing lower, we did expect that the market would have traded lower, but instead it went straight up once again, and it is now threatening to at least test this trend line up here and probably burst through it and continue on. So the leader of the indices, the NASDAQ, says, I don't want to hear anything about a two-day pullback. I'm going straight up, and I'll tell you what, I'm going with the NASDAQ. I am looking for this market to move higher. We have green omnis across the board in indices for tomorrow. We will certainly be buying dips, but let's look further at these indices. You've seen that nice bull flag in the S&P, and now you see that we're in this beautiful channel in the NASDAQ. Let me show you a couple of more indices here. Okay, traders, we are now looking at the Dow Jones Transportation Average, and as we know for many, many years, this was clearly the leader of all indices, but it sort of has taken a backseat to NASDAQ after that massive drop that we've seen over the last year and a half to 2 years. Well, it is beginning to gain some legs once again and start to take the lead. Look at this beautiful channel that we're in right here, and it continues to stay inside that channel. It's breaking out of major resistance lines, and it looks like minimum we're going to come up here and test probably somewhere near the 37.20 to 37.50 area. I would think much higher, but that is the top of this trend channel. I say at some point we blow right through this and continue on. So the transportation average is beginning to do its job now and start to take the lead once again, and it's pointing straight up right now, traders. So I really like these indices, but there's even more. Let's look at another one. Okay, traders, now here's a chart you've seen in numerous videos over the last couple of weeks. I have shown this to you, and I simply said, huge V bottom. This is something that you like to see. A nice wide V forming after a big drop is something that you want to see on a chart. Then you have the big inverted head and shoulders, and we're above the 200 bar moving average, and we're above the Omni proprietary moving average. This is all in the Dow Jones Industrial Average. And if you remember, I had 3 question marks on this shoulder right here when half the shoulder was not formed yet. And I had a note there, and the note said, this shoulder needs to be filled in with 3 question marks. Well, it looks like we've filled it in, and now we're working our way out of it. We are right here, right now, traders. This looks really, really constructive above that mini head and shoulders, above the massive inverted head and shoulders. Right shoulder seems to be filled in, V-looking bottom. From here, you can have a massive rally over the next few weeks, and that is exactly what this analysis has been pointing towards, especially when looking at the larger picture. Definitely that is a very good picture for you to look at if you're expecting higher. But I want to show you some weekly charts now that'll really illustrate what's going on here. Okay, traders, once again, another chart that was in a video or in a couple of videos over the last few weeks. This is the NASDAQ weekly bar chart. What I found so important about it was on the weekly, we got above the Omni's proprietary moving average, maintained it for 1 week, and is now staying above it for a second week. If you recall, the reason why I showed you this chart was that on the way down after the big break in 07, the NASDAQ weekly got below the Omni proprietary first, and many other indices followed it on the weekly chart. They started getting below, and then a major break took place. Well, on the way back up, the NASDAQ is the first weekly chart to get above the Omni proprietary, and I have a feeling it's going to pull the S&P right up with it as it is the leader. Let me show you what the S&P looks like on a weekly, and I will say this, I expect the weekly S&P to follow this NASDAQ and get above my Omni average. Let's go look at it. Okay, traders, once again, a chart that I've shown you in many videos. This is the ES, it is the weekly. We were able to call basically the top of the market in 07 using this chart. It started out with the head and shoulders and a V top. It broke down. We were basically able to call the bottom area. It started now with a V bottom and an inverted head and shoulders. Here's the important thing about this. Up here is the Omni proprietary moving average and a target that I think we can easily get to. That's somewhere near 1100, traders. The S&P needs to just get pulled up by the NASDAQ and get into the Omni average just as the NASDAQ is now. And again, on the way down, it was the NASDAQ that got through the average first. The S&P followed it on the weekly. Now on the way up, the NASDAQ gets through the average first, and the S&P is starting to run up behind it. Here is my target, not a projection, because I think we'll even end up higher as time passes. But there is a target. You are looking at somewhere near 1100 for the S&P to get up near my Omni average on the weekly chart, and I certainly think it will. One last chart I want to show you now, traders, is the S&P on a daily, but it's the cash chart because it shows you what happened in the past. I want to show you one more thing that should convince you that we are now beginning to go straight back up. Okay, traders, the last chart on tonight's menu is the S&P cash daily bar chart. And traders, what I want you to see is that when we finally started to break, it was just a few straight days of right down through the 1150 down to the 1000 mark. From 1000 S&P to 1150, just a couple of days of straight drop, and it got us there. On the way back, because there was a vacuum here on the way down, you should see the same vacuum on the way back up. Now, the way up is always a little harder. You got gravity, you got sellers, you got a lot of people thinking maybe it won't go. So I don't think you'll have it happen in just a few days, but it should be very quick, straight back up, at least to the top of this area that I call a vacuum, because not much happened in here except for a straight drop down on the way down, and likely we'll get a straight rally right back up through that area. So remember, between 1000 and 1150 in the S&P, not a whole lot of resistance. It should just take off and fill that area in as the next days and weeks ahead go. So let's see what happens. Traders, pull your charts, pull your weeklies, pull your dailies. See what you see on your charts. And if you don't see what we're looking at, please come on down to the Omni Trading Academy, where we will help you visualize and look at these charts the way we see them. Because traders, again, we keep our opinion out. We clearly and purely just use technical analysis in order to come up with levels. Then, of course, you have all the mentality behind how to trade those. That's another story, but for now, looking at charts, we can certainly teach you how to look at the charts so that you can get a gauge on what should happen next in the marketplace. So, traders, you see those charts? Now, look, the bigger picture is this. If currencies are going up and the U.S. dollar is getting hammered, our stock market, the U.S. stock market, will continue to rally. And I'll tell you what, even if other world's currencies are going up right now, if the U.S. stock market continues to rally, your markets around the world are going to rally with the U.S. stock market, because if you remember, the U.S. stock market started dropping first. Everybody else was still doing all right, and then you followed us down, right? Well, now the U.S. stock market is clearly showing that it wants to go higher, and I think your markets will follow the U.S. markets as they did on the way down. They'll follow them on the way back up. And after showing you that chart segment, there's only one thing that I can do right now, and that's this, traders. Officially, I am taking Don't Fall in Love with the Upside off my board, baby. You are gone. Away it goes. I could not wait for this day, and it is finally here. I don't want to see that on my board ever again, but hey, If we turn out to another bear market, I'll put it back on the board. Now, that doesn't mean we won't get pullbacks, but pullbacks at this point need to be purchased. So no longer will you see don't fall in love with the upside on my board. And I kid you not, the possibility of don't fall in love with the downside being on the board is very high. We continue in this pace, we break a few more hurdles, and I'm going to put that on the board. So once again, don't fall in love with the upside is gone, baby. Yeah, all right. I think, as I showed you in that last chart, it is very likely that we're going to have some blast off here, even if there's a little pullback when it's done, which I'm not counting on. But even if one comes when it's done, we're going. You know, you never know. October, you hear about it a lot of times. People are worried about the month of October. A lot of times you get crashes. We have crashed so hard in the last 2 years. I don't know that you need to worry about that anymore. What you need to do is focus on the upside, and that's what I will be doing. So I can't wait to see what's going to happen over the next few days and weeks ahead, but I certainly will be buying dips as it happens. All right, traders, guys, anything else I need to say here? Because this isn't a weekend webinar, and I got to get out of here.
Trading contest.
Trading contest, that's right. We had winners of the trading contest. Last week's trading contest winners, that was the week ending 7/30/2009. First place winner was Shy with 14,275. Yeah, baby! Second place winner was Maverick UK with $7,688. And in third place was Beeman with $5,688. You go, guys. Beautiful work in the trading contest. Traders, please come join our free trading contest. We give you a simulator with $10,000 simulated bucks in your account, and you are trading the S&P. It's a day trading contest. It ends at the end of every other week. This week you can sign up. Next week starts the contest, and there are cash prizes. We give out cash to the top 3 winners. So once again, congratulations to you 3. Well, Shy, you've been in the top contention for the last few contests. You're doing really well. Got to keep up the great work. Thank you so much for all your hard work. All right, traders, please give me a call anytime day or night, 702-629-4755. And remember to keep your emotions out of trading. But wait, before I say that, there's one thing I will not do a video without saying, and that is this. A stop is your best friend. Traders, yesterday we had stops in. Luckily, our stop got hit. It was a smaller stop than usual. It was not that bad, and done with it. Had we not had a stop in, we would have really been choking yesterday as it rallied. So a stop is your best friend. If you call a trade wrong, at least your stop is in to knock you out and keep you in the game. So place your stops, always place your stops, and always place them first before you get into the trade. All right, traders, again, remember to keep your emotions out of trading. One of the best things you can do is say this to yourselves every morning, every afternoon, every evening, and you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.